Decoding the crypto landscape, in-depth analysis and expert commentary on the latest developments in the crypto industry, a winding convergence of technology, finance, and evolving regulation, continues to intrigue and debate. Recent news ranges from Binance's introduction of a high-yield stablecoin to Detroit's crypto tax initiatives. Let's dive deeper into these topics with an analytical perspective, exploring the implications, potential risks, and future scenarios. Binance's high-yield stablecoin, innovation or a reminiscence of Terra Luna. Overview: Binance, the world's largest cryptocurrency exchange, has announced plans to introduce a new stablecoin, BFUSD, with an attractive annual yield of up to 19.55%. This follows the company's previous forays into stablecoins, which faced regulatory hurdles in the United States. Notably, Binance announced that BFUSD would not use an algorithmic peg, setting it apart from the ill-fated Terra Luna stablecoin. Analysis: the announcement of such a high yield immediately brought back memories of Terra Luna and its catastrophic collapse. Terra Luna's demise stemmed from its algorithmic design, which relied on the creation of new tokens to maintain a fixed rate with the US dollar. As trust eroded, the system went downhill, leaving investors with huge losses. BFUSD appears to be structurally different, given the promise of being backed by real-world assets, much like Tether or USDC. However, the exact mechanism for delivering these extraordinary returns remains unclear. Binance has indicated that further details will follow, but skepticism is warranted. For example, a market liquidity. The 20% yield suggests Binance expects high liquidity and the ability to use the stablecoin within its ecosystem. A staking mechanism. The yield could come from trading fees, lending, or partnerships with liquidity providers. The risks. If not transparent, the yield mechanism could raise concerns about potential hidden leverage or risky investments backing the stablecoin. If successfully launched and adopted, BFUSD could cement Binance's dominance in the stablecoin market. However, the move could increase tensions with regulators, especially in jurisdictions like the United States, which have closely monitored stablecoins. Binance.US has already faced shutdowns due to regulatory pressure, and further scrutiny could spread globally. Predictions: 1. Regulatory oversight. BFUSD is expected to face regulatory scrutiny, especially regarding its yield mechanism and guarantee reserve. 2. Market acceptance. With such a high yield, BFUSD could disrupt competitors like Tether and USDC, especially in regions with less regulatory oversight. 3. Potential risks. If Binance's reserve or yield mechanism proves unsustainable, the integrity of the stablecoin could face the same vulnerabilities as Terra Luna. Shiba Inu ecosystem expansion. Can memecoin reinvent itself? Shiba Inu, a popular memecoin, is back in the spotlight with new announcements from its lead developer, Satoshi Kusama. The focus is on a marketing plan to enhance the project's ecosystem by 2024, including the Bone governance token and the Shibarium Layer 2 solution. Analysis: Shiba Inu's strategy revolves around leveraging its existing community while addressing criticisms aimed at memecoins. Unlike Dogecoin, which largely operates as a speculative asset, Shiba Inu is developing utility through 1. Shibarium, a Layer 2 scaling solution that aims to reduce transaction costs and improve throughput. 2. Ecosystem tokens. Bone and Leash play specialized roles, with Bone serving as a governance token and Leash providing additional utility to ecosystem participants. 3. Token burning. The continuous burning of Shiba Inu tokens is intended to create deflationary pressure, which is likely to drive long-term value. Implications: focusing on utility is a strategic move for Shiba Inu, but challenges remain. Saturation. The memecoin space is crowded with competitors such as Floki Inu and Pepe. Differentiation through ecosystem utility is crucial. Sustainability. Many promises from Shiba Inu's previous roadmaps have yet to be fulfilled, potentially eroding trust if similar delays occur with this initiative. Predictions: 1. Short-term price action. The marketing plan and ecosystem upgrades are likely to spur speculative interest, causing volatility in the price of SHIB. 2. Long-term viability. The success of Shiba Inu depends on whether Shibarium and its associated utilities can attract sustained user adoption or become a passing hype. Corporate Bitcoin race. Accumulating as an inflation hedge. Overview. Corporate Bitcoin acquisitions are accelerating. Companies like MicroStrategy, Metaplanet, and Similar Scientific have made significant acquisitions, betting on Bitcoin as a hedge against inflation and economic instability. Similar Scientific's recent purchase of 47 Bitcoins brings the company's total Bitcoin holdings to 1,058 Bitcoins, making it the 17th largest publicly traded company to hold Bitcoin. Analysis. Bitcoin's appeal as a corporate asset stems from its finite supply and its ability to withstand inflationary pressures. This year's corporate acquisitions align with broader macroeconomic concerns. Rising inflation. With inflation expected to rise by 2024 to 2025, Bitcoin is increasingly seen as a hedge similar to gold. To institutional FOMO, companies fear being left behind as peers like MicroStrategy dominate headlines and attract investor interest by adding Bitcoin to their balance sheets. Implications. 1. Market impact. Corporate purchases create upward pressure on Bitcoin's price, exacerbating the scarcity narrative. 2. Public perception. Institutional adoption could further legitimize Bitcoin, attracting retail investors and driving adoption. Predictions. 1. Quick buys. As Bitcoin approaches its next halving event in 2024, expect corporate and institutional buying to increase. 2. Regulatory challenges. Companies holding Bitcoin may face increased scrutiny over their accounting practices and risk disclosures. Detroit's crypto tax initiative. Progress or PR. Detroit has announced plans to accept cryptocurrency for city taxes and fees by mid-2025, positioning itself as a technologically advanced city. This follows similar initiatives in other jurisdictions to integrate blockchain technology into public finance. Analysis. While innovative on the surface, the initiative may struggle to gain traction. Barriers to adoption. Few individuals or businesses are likely to give up their appreciation in crypto assets to pay taxes. Fiat alternatives remain more practical. Regulatory challenges. Cities that adopt cryptocurrency payments may face compliance challenges, particularly around anti-money laundering, AML, and Know Your Customer, KYC, regulations. Strategic motivations. This seems more like a branding exercise to attract blockchain businesses than a genuine effort to modernize city finances. Detroit's broader strategy may involve positioning itself as a hub for blockchain innovation, leveraging the initiative to increase visibility. Predictions. 1. Low adoption. Few taxpayers will choose to pay in cryptocurrency, limiting the program's real-world impact. 2. Broader adoption elsewhere. Other cities with stronger blockchain ecosystems could refine and scale similar initiatives, gradually normalizing cryptocurrency payments in public finance. Concluding thoughts. Navigating the next phase of crypto evolution. The cryptocurrency landscape is in a state of flux, driven by innovation, regulation, and market dynamics. Key takeaways include: 1. Institutionalization. From Binance stablecoin to corporate Bitcoin acquisitions, institutional players are cementing their dominance. 2. Regulatory pressure. As adoption increases, so does scrutiny. How projects navigate compliance will shape their success. 3. Community resilience. Grassroots projects like Shiba Inu highlight the enduring strength of the crypto community, even amid market turmoil. 2024 is expected to be a transformative year for crypto, marked by continuing regulatory developments in the US and globally, increased institutional activity as Bitcoin's halving approaches, a growing competition among blockchain projects to differentiate themselves through utility. The next phase of this journey will require balancing innovation with accountability, ensuring that the decentralized nature of cryptocurrencies is not lost in institutional adoption.